Let's get the spoken word now on global tech from our chief equity strategist, John Blank, who joins me here. So, John, you wrote recently that occasionally an international trader should embrace the view that tech drives the world economy. Obviously, by that statement, I'm going to infer that this is one of those times.
Terry, this has been the time we live in for the last probably 15 to 20 years. And I'm old enough to remember that this has not always been here. The internet, the cell phone, interconnectivity is all new to the world from that time. Previous to that, we had China, we had Russia, we had the United States and its allies in a massive military battle with each other, build-up with each other, called the Cold War. That disappeared. And what came about 5 years after that whole thing ended was the growth of the internet and the personal computer and the cell phone all together. But these things have taken place not only in the United States, which is where the leadership has been, but also in Russia and also in China now. And this is what I think is a new globalization. It's pulling these groups together. It's not involving the currencies that we're worried about. It's not involving the governments and their battles. It's not involving the banking system. It's just tech, science, convergence of ideas, interconnectivity. This type of innovation revolution probably is a dramatic pulling together effect that we need to take seriously for at least the next 10 years.
All right, and by tech, you're actually referring to search engines.
Search engines, correct. I mean, for example, in the United States, we've got Google. Google in the last 3 weeks has sold off Motorola Mobility, but they've kept the patents.
Easy for you to say.
Right. And they've kept the patents, Terry. That's, we all saw the number that they sold the thing to Lenovo for was a fraction of what they bought it.
Right.
But they kept the patents because they're making deals with Samsung.
Yep.
Then they went ahead and bought a UK company that does artificial intelligence research and leadership. And then they bought another company called Nest that does actual gadgets, devices that the gentleman who ran Nest was in with the iPhone and the iPad. So Google clearly is saying yes to this idea, and they're going to continue to provide the leadership in this next 10 years. And then outside the United States, we've got a company with 60-some% of market share in Russia and 6 or 7 countries around it. It's basically the Google of that part of the world. In fact, you forget that Sergey Brin is a Russian emigre with origins of mathematics and science so strong in Russia. That search engine in many ways is stronger in its abilities than Google. So you've got this going forward. They have $1 billion in cash. They're growing 30% a year. And they got a barrier to entry in the form of that language. Then if you go all the way over to China, we know that they had state media. They were a communist country. Well, guess what? Out of Hong Kong, there has come a tycoon who has put in mobile media that is now stronger than the state enterprise media outlets. It is stronger than Google. It is stronger than Alipay and stronger than some of the Chinese internet companies exist. So now you've got another 1.5 billion size market of mobile media. And so you look now at the world of these 3 areas. Russia with its own internet, leading edge area, building gadgets.
Right.
Google looking to South Korea and the UK to build gadgets. And China having this perhaps the most dramatic opportunity available to it, just given its sheer size. And all of those technologies are bringing these groups together.
So you, in fact, refer to China as the next generation media.
Next generation media, absolutely. China is going to transform this whole idea. Because one of the things you can learn from development economists like myself is you don't have to follow from someone else's leadership. You can leapfrog it. And China may well just decide we can see where it's going, right? Which is why we go back to Google and why it's raced forward with all its own acquisitions. It knows this. You cannot rest in this market. The next 10 years may obliterate these leaders. So, and China with its sheer size, the scale and the kinds of profitability leverage that you get out of that has to be taken seriously. And if they have, again, the scientists, the leaders, the media people to put that forward, they could take over this space.
So does that explain some of the product diversification that we've seen lately that Google's trying to get into?
Absolutely. Google is a global company. They are tracking these competitors. They know they're smaller, much smaller. They take them very seriously.
Still, though, being smaller competitors, you say that there's opportunity there for investors.
Absolutely, Terry. I think, from an investor perspective, look at Google's share price. It's $1,150 a share. As we've talked, that could mean it goes to $1,500. However, you can buy the search engine company in Russia for $40 a share. You can buy this next generation media company in China for 10. So you can do the math that the competitors in China can come out now, the competitors in China, at $80 or $90 a share. And we can easily see that search engine company in Russia, if it has 3 to 5 years to grow like it is, to get over $100 a share.
All right, thanks for that, John. That's the spoken word on global tech from our Chief Equity Strategist, John Blank. And with John, I'm Terry Ruffalo.